Very pleased to get back live from the trading desk. I got Victor Adair there. Victor, I mean, come on, is anything going on? We're at the late part of August, people grabbing those extra holidays. Is the marketing positioning for some big moves, or what's going?
Mike, I'll tell you, there's more going on out there than you would think. And even though it is the crazy days of August and all that kind of thing, I mean, this market, to my mind, is just setting up perfectly for me. Drew and I really like to trade what we call market psychology, especially as it swings. And, in graphic terms, it swings from people are way too greedy to they're way too fearful and, everything in between. So we look for these swings. And I have to say that I am predisposed to sell markets because, in my experience, markets go down a lot faster than they go up. People buy over time. And I love to find a market where it's just like it's fat and happy, okay, and just due for a punch of the eye.
Yeah.
Yeah, and I think that's kind of where we are here. The market psychology for the past several months, like let's say from the beginning of the year, has become it's in a risk-on mode. Complacency rules. Capital has gone from the center out to the periphery. Let's call it that. Aggressively reaching for yield. That's the kind of environment we're in, and I think we saw some signs this week that that are an early warning sign to me that as we go back into the fall, things are going to change.
Yeah, and that's a key thing. We were talking about it earlier with Patrick Sarisna about the incredible lack of volatility, the complacency in the market, and he thinks there's an opportunity to just simply play a change in that volatility. But I think, as we all know, Vic, September has certainly been a market killer, a bull market killer, and of course then the famed October 1929. So there usually is a heck of a lot more action and volatility than we've been experiencing over the last couple of months.
That's right. And, there's always a rationale. And one of the beautiful little one-liners is, Tina, there is no alternative. People turn to one another and say, well, I know it's probably a little risky, but, gee, you got to do something with your money. Let's get in. I mean, everything's going up. Let's not get left behind. Here's what we're doing. We are bullish of the U.S. dollar. We are bearish of commodities. Now, that's just in our space, so that means we're long the U.S. dollar index. We're short of Canadian dollars. We're short of Australian dollars. Just this past Sunday afternoon, I reestablished my short position in WTI. And when I read Joseph Schachter's report here day before yesterday, I was glad to be back on the short side. And we've been short bond premium for the past month. In other words, we think the bond market made its high for the year and is trading off. That's and these are like initial positions. What I hope, Mike, as we go into September, if we start with a bang and the market starts to move back toward being a little afraid, that we've got the courage of our convictions to step up and add to the trades we've already got on.
Yeah, let me just review very quickly there, Vic, with you. So you're still playing that U.S. dollar longer term to go up. You're still not really a big fan of that commodity sector.
That's right. Yeah, and I mean, for instance, with the gold market, gold had a terrific rally the first part of this year. I think it's got a little ahead of itself, and if we get into a market where leverage is being reduced, we could see gold prices fall back a bit. I'm not talking about gold's going to go to zero. I think
no.
I can trade gold for a $100 swing. That's very worthwhile in my world.
As I say, as we'll get to the real kickoff will start, as we get into past Labor Day when things, at least volumes get back to the norm. So, we'll see where the directions go at that point, obviously.
Yeah, I'd look for, volatility to ramp up. Your previous guest, Patrick, talked about how volatility is just, there isn't any vol. So I think that's gonna happen. And with that, some of the things that have gone too far one way will go the other way. So I'm not interested in buying emerging market equities, for instance, or bonds, even more, that have had a tremendous run here over the last 6 months. I'd more likely want to short them.
The calm before the storm. Victor Adair will be there to chronicle it with us. Victor, thanks for taking the time, and I hope you have a terrific weekend.
Hey, thanks, Mike. Always good to be on the show, and you have a good weekend, too.